CPA Scott Adair is back with us once again. Scott, good to see you.
Good to see you too, Mark.
So tax season and tax filing errors are the top of our list this morning. Why is it so important to avoid these errors? It kind of stands to reason, but it's worth just sort of driving home.
Yeah, I think the primary reason is, Mark, it will delay a refund or delay the processing of your tax return, making sure that all the information is correct in your return.
Right, not the end of the world.
Correct.
It's just going to slow things down.
Absolutely.
All right, so that's why we want to do it. All right, let's talk about a few things people should keep in mind. And for starters, the proper filing status. This is an area where more people make mistakes than we might think.
Yeah, it's one of those basic steps that you really need to know what your filing status is. The most common one is single versus head of household. If you are a single parent who has expenses associated with a child, and they are a dependent of yours, consider filing head of household versus single.
Right, a lot more advantages in that regard.
Absolutely.
There, right? Okay, let's talk about income. And in this case, additional income. We think about W-2s, 1099s, but sometimes people forget to report that other income they receive.
Yeah, really important here because it'll come back to bite you later on. And so you want to make sure that if you do have income that's not reported on a 1099 or on a W-2, that you claim it in the year that you've earned it, because the IRS will find out about it and they will come back to ask you questions about it.
Mistakes this year especially related to tax credits, because there have been some changes, right?
Yeah, we have a new credit, a $500 dependent credit, which is eligible for dependents that are 17 years or older. We used to have we have the child tax care credit that is for 17 and under, but this now gives you $500 additional for 17 and older.
Okay, that's worth noting. There's another credit we want to talk about, lifetime learning credit, right?
Yeah, lifetime learning credit is a new one. It gives you up to $2,000 of a tax credit for educational expenses for professional development or graduate courses, which is different from what we've had in the past, which is the American Opportunity Tax Credit, which allowed you for undergraduate expenses.
And that's lifetime, right?
That is correct,
wow.
Yes.
Okay, worth noting. Other thoughts here, and this sort of brings it full circle, but the idea of making sure that when you fill out the return, that you're getting all the numbers right.
Yeah, make sure that all your addition and subtraction is correct. You always have to do that. Make sure that you get the correct names. Social Security numbers are really important, as well as bank routing numbers. As many of us who get refunds or have to pay wind up using a credit or a payment through your bank account, make sure you get those routing numbers and the bank account numbers correct.
Right. Otherwise, it just slows the whole process
Absolutely,
down.
Yep.
Final thought along these lines.
You know, we're hitting the home stretch as far as tax filing season goes. Make sure you get all your stuff together and get in to see your CPA, or if you're doing it yourself, make sure you're making sure that all the information is entered correctly.
Right. No mistakes this year. We want it done perfectly.
Exactly.
Thanks, Scott.
Thanks,
if you missed any of our conversation or want some more smart money advice from the State Society of CPAs, the website is nysscpa.org/getmoneysmart, and you'll find it on our site as well at rochesterfirst.com.